Good morning and a wonderful Wednesday. Welcome to today's episode of Morning Wealth. Three things that we will talk about: the TINA trade, earnings roundup, and USD is in trouble. The S&P 500 closed at its highest level ever on Tuesday, capping a remarkable rebound fueled by an unprecedented government stimulus and optimism among investors about the world's ability to manage the coronavirus pandemic. The benchmark US stock index rose 0.2% to close at 3389.78, surpassing its prior record of 3386.15 from Feb 19 and erasing a historic plunge during February and March that ended the longest running bull market in history. The S&P 500 is now up 4.9% this year. Nasdaq Composite Index, on the other hand, has already set 34 records this year, was up yesterday as well and surging 25% for the year. Investors of all stripes have flooded into the stock market since the government intervened to shore up the economy. Institutional money managers who vowed never to fight against the Federal Reserve continued buying stocks after the central bank slashed interest rates to near zero and moved to stabilize the credit markets. And zero commission trading apps lured day traders into the market at the fastest pace since the heyday of the dot-com investing era. The Fed's intervention in the process pushed bond yields towards their lowest ever levels. Left with few other attractive options for returns in this environment, many investors saw little choice but to continue betting on stocks or risk missing out on the rally. The problem has been so common in recent years that it has its own acronym, which is TINA, which is there is no alternative to stocks. On the earnings front, Walmart had a great quarter, but also a warning for Washington. The retailer's comparable sales growth slowed last month as the impact of the government relief program waned. The company incurred incremental COVID-19 related costs of about $1.5 billion. E-commerce sales almost doubled, helping comparable sales beat. Elsewhere in the retail landscape, Home Depot also reported. Home Depot's comparable sales grew by more than double the estimate as bored homeowners with cash to burn turned to DIY. Kohl's plunged though after it posted an adjusted loss of 25 cents a share and once again failed to provide same-store sales numbers. Next up, we'll have Target and Lowe's, which is going to come in before the US Open today. On the greenback is in trouble. The dollar sank to its lowest level since May 2018 and weakened against every major peer on concern that the US economy will struggle to regain momentum with no relief package in sight. The euro, on the other hand, hit a 2-year high. The greenback has now erased most of its gains it built on the back of US-China trade tensions that started heating up about 2 years ago, fueling worries about global growth prospects. This time, investors see the US as a potential laggard amid questions over government's response to the pandemic. The euro is extending its advance since last month's landmark European Union stimulus package, which brightened the region's prospects relative to the US. The dollar has been on a defensive since mid-year, with lawmakers unable to agree to measures to support the economic recovery from the pandemic, and the nation's real yields dropping to multi-year lows. Now, on top of all that, investors' attention is also turning towards the November presidential election and the uncertainty that may bring. The dollar failed to gain much traction on Tuesday, even after a report showed the US housing starts actually surged in July amid record low interest rates. The resilience in that corner of the economy, which is housing, comes as roughly 15 million Americans remain out of work in the coronavirus pandemic. With some investors still skeptical about the durability of the recovery, the Federal Reserve's buying billions of dollars of treasuries to support markets, benchmark US yields remain not far above the record lows. With their premium over global peers narrowing, the dollar's appeal is also dimming on that front. So on that note, the 10-year US real yield, which is the rate after you strip out the inflation, is now only about 30 basis points above its German counterpart. That's the smallest spread since 2014. So all this is adding up to what is contributing to this sell-off in the dollar. That's your update. Stay safe and healthy, everyone, and speak soon.